All right, let's dive right in. Today, we're talking about a sector that is a direct pulse check on a nation's growth: Pakistan's cement industry. It is, literally and figuratively, the foundation of the economy. And for any investor, you've got to understand its cycles. So let's break it all down. This sentence right here, this is basically the entire investment thesis in a nutshell. It's a really powerful idea, right? It directly ties the fate of these huge companies to the progress of the nation itself. And today, we're going to unpack exactly what that means for you as an investor. So, why is this sector such a big deal? Well, because its fortunes are fundamentally locked in with national development. Think of it as a direct proxy for economic growth. When a country is on the move, when it's developing, it has to build. And to build, you absolutely need cement. And it's not just a part of the construction industry, it's the very backbone. I mean, before a single road gets paved, before a new skyscraper even begins to break the skyline, the first thing that happens is demand for cement just surges. This makes these cement companies a fantastic leading indicator of what's coming next for the economy. And check out where all this demand comes from. It's incredibly diverse. We're talking about huge public sector projects, massive dams and highways. But at the same time, you've got the private sector firing on all cylinders with commercial real estate and brand new housing schemes. This mix gives the industry multiple, often overlapping ways to make money. Okay, so we know it's a critical sector, but who are the actual companies making it all happen? As investors, our job is always to filter out the noise and find the real signal. We need to focus on the companies that truly move this market. Now, you might be surprised to learn that there are 19 different cement companies listed on the Pakistan Stock Exchange. 19. That sounds like a lot to keep track of, right? But here's the good news. You really don't need to analyze all of them to get a handle on the industry. We can narrow our focus a lot. And here they are. These are the 5 heavyweights that really define the market. You've got Lucky Cement, they're the biggest producer and have a strong export game. Then there's DG Khan, one of the original super reliable players. Faji Cement has the powerful Faji Foundation behind it, which brings a ton of stability. Meanwhile, Maple Leaf is known for its quality, and Bestway is just a massive shareholder in the market. Each one of these offers a totally different way to bet on the sector. Now that we know who to watch, the next big question is what to watch for. What actually makes these stocks go up or down? Well, we can pretty much boil it down to 4 main levers that directly mess with their performance and their profits. If you understand these, you understand the investment. Think of these levers as being in a constant dance. On one side, you have your revenue engines, strong local demand and growing export markets. That's the good stuff. But on the other side, their profits can get squeezed by the global price of coal, which is a huge production cost. And then, layered on top of all of it, you have government policies. A big infrastructure project can come along and act like a massive turbo boost, creating a sudden, guaranteed surge in demand. Okay. This brings us to the final and honestly the most crucial part for any potential investor. Let's pull all this together. What is the fundamental nature of this investment? What kind of stocks are we really talking about here? The key term you absolutely need to know is cyclical stock. It's a simple definition, but it is so powerful. It means their fate is tied directly to the boom and bust cycles of the wider economy. These companies don't exist in a bubble. They basically ride the big economic wave, up and down. And this cyclical nature creates 2 completely different realities. When the economy is booming, construction is everywhere, profits are soaring, and these stock prices can just shoot for the moon. But when the economy slows down, construction stops, profitability dries up, and the stocks can fall just as fast. It is a high-stakes ride for sure. So, what's the big takeaway from all this? The most crucial point is that timing is everything. This is not a buy and forget kind of investment. No way. To be successful here, you have to have a really good read on the overall economic climate and where you think that construction cycle is headed. Your analysis of the market is absolutely paramount. And that brings us to our final thought here. The long-term story is pretty clear. Pakistan is going to continue to build. So for you, the investor, the real question isn't if the building will happen. The real question is figuring out which of these companies is in the best position to supply that foundation. And, of course, when is the right time to invest in their future?